So this paper is paper November 2017, paper 22. So you all can use it as in future to do the exercise again. First question is basically asks us to prepare the cash book and the petty cash book. And they say that the impress amount is 150. All payment below 100 are made from petty cash. So take notes about the information in here. They say less than 100 must use the petty cash. So September 1st, petty cash impress restore from the business bank account. So petty cash receive money from where? From the bank. Okay, and how much of it, the amount that we receive? They say impress amount is 150. So we take 150 minus 63 because beginning of the month, we still have $63. This debit in here do the credit. So do one shot so at least we won't miss out. So in here, petty cash, $87. Okay. The next entry, pay taxi fare. Taxi fare $12 less than 100. So we have to use the petty cash book. So set on third, taxi fare. And the amount paid is 12. So taxi fare is related to travel. So we put under the travel. 7, pay 461 by check for repair to the office machinery. So here, more than 100. So we have to use the cash book on 7. And here they say by check. So this one must be in the check column. Repair office machinery. And the amount is 461. 461. Okay. The next account. 11. Purchase office stationery. 64. 64 is less than 100. So we use the petty cash book. So 11. Office stationery. Okay. The amount is 64. Okay. And then this one is postage and stationery. The next one, on 15, a check for 210 received from SL store in August was dishonored by the bank. So bank received money. Subsequently, cannot be clear. So this is about check. So we have to put into the credit side. So 15, from who? We return back to SL store. Okay. And the amount is 210. 210. 21st, pay Farika a credit supplier, $29. 29 less than 100. So we put into here 29. 21st, the supplier name is called Farika. Okay. So this amount is 29 under the ledger 29. The next one is 26. Receive a check from Tusari to 392 in settlement of the amount due less 2%. So here, September 26. Okay, okay. And this check amount, receive a check from Tusari. This check amount is 392. So check amount 392. And they say in settlement of amount due, less 2% cash discount. This is after the 2% discount. So to find the discount allowed, we take this amount, divide 98% times 2%. So this one is $8 for the discount allowed. Next is 28. Cash sales 4,840, which 4,008 immediately pay into the bank. So here 28 sales, but the sales amount had to 4,008 in the bank. Balance will be 40 in the cash column. Next, 29. Pay Sofita account of 480 after deducting a cash discount of 2.5%. So this one is paid to on 29 on 15. Okay, from what day? Let me see. On 29, pay Sofita, and the amount of the account is 480 minus after deducting, so 480 divide, this one can straight away times 2.5%, $12, and then here will be 480 minus $12. So this is the amount that the bank amount paid out. Okay, next is that pays postage 22, pay postage 22, and here is 22. Okay, basically all account done already. So what we got to do, you have to subtotal. Oh my God, big one. Okay, we subtotal the amount first. Okay, here is 150. So we take the 30th balance carry down. Okay, which is taking this plus this minus this. Okay. Okay, so this is the amount, and this the question saying that even though sometimes the question did say that balance off on the 1st October, still make sure that we complete the double entry. Just put in the complete double entry for the carry down and the brought down. Okay, so the amount is 23, and then here is the October 1st balance brought down. So settle for this. Okay. Now the next one, cash book. Okay, cash books. Okay, we sort the total debit and credit. Okay, here, how come? Let's see. Okay, here 30th balance carried out. Okay, and then here also same, minus. Okay, both also in the credit side, so that means you have balance, debit balance. So the debit balance amount is 16,125. Here is October 1st balance brought down. So this account considered done. Okay, now let's move on to the next. So this account for your this one. Okay, and then for this one is here. Okay, now next is okay, the question saying that on 30th September 2017, Safid bank statement show an overdraft 4,649. She compared the cash book with her bank statement and found that the bank has not recorded the transaction shown in the cash book on the following date, 26, 28, 29. So which one is 26, 28, 29? So these two, okay. So these two, 26, 29. So these three, this transaction, okay, this all the transaction. Okay. This amount in the debit. This transaction is uncredited amount. When we do the uncredited amount appear in bank reconciliation statement. Okay, whereas this one unpresented check, okay, will also appear in bank reconciliation statement. So for this appear in later on when we prepare this one, it will appear in here. So if we start from the bank statement, this is overdraft. That means bank statement in the debit side. If we start from the cash book, this is the cash book, and the bank balance is 125. So I start with the cash book 125. Okay. Bank reconciliation statement at 30th September 2017. Okay, put two columns. I need to enlarge a bit. Okay. If I start from balance as per cash book, so I have to add unpresented check because this is stand from the bank statement. Bank statement has not updated the balance in bank statement should be higher than cash book. Along the way, if you have anything that you're not sure, not clear, please let me know, or you stop me and I explain again. Okay, so this is for the unpresented check. Stand from bank statement. Bank statement has not recorded. So bank statement should have more money than the cash book. So we add it back into here. So the item that we have in this question, our cash book balance is in the debit side, which is this one. So it's a positive. So 125, don't put the overdraft. Okay, this one is in the positive. But this unpresented check, only unpresented check is the money that we pay, the money that we pay to the bank, but the recipient or the payee has not go to collect the money yet, have not go and take the money out from our bank. So this Sofita will be the person that we are owing but haven't go and take the money. So this amount will be appear add back this amount because our bank statement should have more money because she has not go and take the money out. The next one is less uncredited amount. This uncredited amount is amount already recorded in cash book, but the bank has not credited into the business bank account. So since that the bank have not credited into the business bank account, so bank statement should be lesser than cash book. Okay, so here you have two items. Number one is this person, okay, to Shari, and also the sales amount. Okay, and the amount is 39 and 4,008. So after we plus and minus, so these two had to minus. So we take this plus this minus this. So that's why we get a negative, which is, how come difference? Where is the mistake? Oh, here, sorry, one more item. In addition, the bank has debited Safit business bank account with 50, which should has been debited to her. Okay, this is a mistake. Okay, the mistake done by the bank. Okay, so this mistake done by the bank wrongly deducted into the Safit business bank account. So Safit bank account bank statement should be lesser because this is an error by the bank, because should be debited to personal, not business. So this case here we have to add one more item. Okay, less. For this less of the bank error, this bank error can be plus or minus depending on the question. Okay, can be add or less depending on the question. Okay, so this one be careful because this one is bank deducted, so we should have less another 50 for it. Okay. So here, minus 50. So we get 4649. In the exam, when you have the negative sign, take notes that don't put negative sign, account don't put negative. Hey, how come this one don't have the bracket? Oh my God, how I'm going to change? Let me see, got any formula on it? I'm not sure which one is the bracket size later on. Okay, you all take notes. This one must change into the, okay, what I do is, give me a minute. Put into 4649. Okay, make sure your answer is in the bracket. Okay. So now we settle this one. Okay. If you prefer start from the bank statement. Okay, this one is balance as per bank statement. In case you prefer start from here, so your number, what you will get is more or less are the same. It's just that change the side. Okay, so here you start from the bank statement. And this one, the less you become at. Because this one, now you are standing. Okay. This at is because we are standing from cash book to look into bank statement. Okay, because bank statement have not recorded. So this amount, because it's a negative, so this one you must put this bracket sign. Okay, 4649. Okay, same thing. Put the negative sign, bracket, put into it, take out the negative. Okay, here the amount basically are the same, but it's just that in here you put the at. Okay, whereas in here you put the less. Basically all are the same. Just change the position only. Okay, and then after that, your this one, your this less become, this one at become less. Okay, depending which one you prefer, you just do accordingly. That is fine. So here you plus, you have to add. So because here I put a form, it's not a formula, so I cannot take this to link it. So I have to put 4649 plus these two number and then minus this one. So we will get back the same 125. If in case in the exam you couldn't find this number, or you couldn't find this number based on the number that based on the add or less the number that you put into here, you cannot get this bottom for it, or this one. Make sure if you are able to get your cash book amount, take your cash book amount, put it here, and then your bank statement also put it down according to the question they give you. They say that overdraft is 4649. Put it in, even though you cannot get this amount, because this one automatically you get the amount. So don't waste the point. Okay, now next, move on. Okay, Mustafa opened a garment factory on 1st August. So when they say this 1st August open, this is the first year account. The word open, first year account. First year account, no opening balance. So just be careful for it. Okay, take note for this one. Now, next, continue. Here we have the non-current asset. They say that he decided to revalue the loose tool at the end of each financial year, and also decided not to depreciate. No depreciation will be charged on the premise. The other non-current asset to be depreciated using the straight line or equal installment method of the depreciation at the rate of these two. Okay, just do some recap before we do the exercise. Okay, the depreciation method. You have three methods. Number one, straight line. Okay, the formula to calculate depreciation is taking the cost minus residue value, or sometimes we call disposal value, and then divide by the useful life. Or sometimes in the exam, they take the cost minus disposal value. Same thing, basically are the same word. And then they didn't give the useful life, they give the percentage. Okay, so this one also can be done. If the question didn't give you the residue value or disposal value, you assume it's a zero. So in this case, cost times percentage. Okay, when there's no residue value. Okay, next for the next method, reducing balance. Reducing balance is taking the cost minus provision for depreciation. Okay, and then times the fixed percentage, or sometimes cost minus provision for depreciation, also the net book value times the percentage. Okay, for the next method, revaluation method. Revaluation method is taking the opening balance plus the new purchase minus, if any, disposal minus balance carried out. So here I put new purchase disposal. In this case, if you want to more accurate of this one, should take plus new purchases minus disposal. Okay, and same to this one. For this one, same thing. Take your cost plus your new purchases. This new purchases is a non-current asset. Non-current asset, not the goods. Minus disposal. Okay, this is the formula that you need to take notes. Okay, now here what they ask for, they say that during the first year trading, purchase raw material cost of worth 1,800 were returned to the supplier. Finished good cost 22,000. He bought also. His sales and of finished good amount to, this is a revenue. And here we have wages. We have three types of the wages. One is a factory operative, one is a supervisor, one is a office staff. So these three category. For your this one, this is a direct cost put under the prime cost. Factory supervisor is an indirect put under the overhead. Whereas office staff, this is under income statement, put under the expenses. Okay. Another thing to take note is this carriage inward, carriage outward. Carriage inward is carriage inward. This is a transport cost incurred when purchase goods. So this will be under the cost of sales. Whereas carriage outwards is a transport cost incurred when deliver goods to customer. Okay, this one is our expenses. Okay, there's a differences that you need to take notes. Okay, next what else that to take notes? Okay, I think not much thing here. Okay, this one they say general expenses to be apportioned to the factory and the rate also the same. And let's see what they ask. Okay, manufacturing account. Here, raw material consumed. Okay, our raw material consumed, because this is a first year. First year account, no opening. So we don't need to put the opening inventory. Put the purchases. Purchases minus closing inventory. Our closing inventory is referred to the raw material. So purchases. Okay, we have the return. So you have to insert one row first. Okay, we have one item in here. Purchases return, which is the amount return is 1,008. Okay, so purchases is 447, 400, and then we put the net purchases. So this is our net purchases, and our closing inventory is 62,200. This amount minus this amount. So this okay, raw material consumed. Okay, the next one, factory wages. Factory operative. Okay, 287,400. So prime cost. Okay, this is a format, so you try to memorize it or get used to it. Okay, and then okay, prime cost settled. Now the next section is a factory overhead. Okay, factory overhead. Okay, what we have factory overhead. we have factory wages supervisor. Okay, wages. Factory supervisor. Okay, the amount is 101,150. Okay, next is general expenses rate of rate and insurance. General expenses. Okay, according to the question, they say that apportion 3/4 to the factory. So general expenses 1/3. Show you're working beside your detail. 3/4. Okay, and then rate and insurance. Okay, rate and insurance is 12,600 times 1/4. Okay, what else that we have? Oh, sorry, one more. Miss out. Carriage inward. Here we got carriage inward, so we have to add in. So we plus carriage inward. Okay, the amount is 2590. Okay, now next is what else that we have? Okay, lose two. Okay, these two have to adjust, because wages for operative is accrued end of the year. Accrued end of the year 287,400 plus wages accrued 3760. End of the year expenses accrued end of the year. So add into paid amount. Okay, so just take note for this one. So here we have to adjust it. Oh, come on. Yeah, let me see what's wrong with it. Plus 3760. Okay, now next is lose two will value at this one. This is the depreciation for lose two. So the amount is beginning of the year. We have 19,600 minus 18100. Okay, and then we have another one, factory machinery. This factory machinery is under manufacturing account, office feature and equipment under the income statement. So the depreciation for factory machinery, okay, the working is, they say that factory machinery is using straight line equal installment method of the depreciation at the following rate. So take this 20% times the 92,000. So 92,000 times 20%. Okay. So all the adjustment we done, now we can put in the number times 3/4. 12,600 times 1/4, and then here 19,600 minus 18100 9200 times 20%. So all the amount should be in already. Okay, so take this plus this. So this is we have the here we have work in progress. So we have to add work in progress. Okay. Work in progress. So here is the inventory at 31st July 17. So this one is a closing. So closing we have to minus. So minus, because my one is cannot put the bracket. So minus work in progress 38200. Okay, so we take this minus 38200. So we will get the cost of production. So this amount will be the total for cost of production. Let's continue. The next one, double check, see whether correct or not. Okay, where's the mistake? Yes. Let me see where's my mistake. So this one plus, okay, and this is closing inventory 62 minus, and then factory overhead. Factory overhead is factory operating accrued 37. So we have to plus. So this one be plus 287 plus, and then these two add up together, and wages 101. This one is general expenses factory overhead. Oh, here is wrong. This rate is 2/3. 2/3. Okay, so okay, correct already. Now let's move on to the next. Okay, for the B, they asked to calculate. Even though they say calculate, try to put in the format of the cost of sale. Start from your cost of production, because this question don't have the opening inventory, but we have the cost of production. And this question, they have the purchases, purchase of the raw material. They say that finished good, purchase finished good 22,200. So these purchases also part of the cost of sales. So purchases of finished goods. Okay. The amount is how much? 22200. Okay, cost of production. Cost of production is this one. And then we less closing inventory. This closing inventory is referred to the finished goods. Okay. Here, finished good 69700. So we take these two plus and minus this one. So this is our cost of sales. Okay, remember, even though sometimes, most of the time they will say calculate. Nowadays, most of the questions are calculate. But when you calculate, make sure you show the present, you show the detail. What is the detail that you are deducting, or plus or minus? Okay, next, Mustafa want to expand his business and need to obtain long-term fund to finance it. He decided to apply for 10 years loan. So this 10 years loan, 10 years bank loan, indicate to you this is a non-current liability. Okay. Suggest disadvantage of raising funds by means of the bank loan. Okay. Bank loan is you have to must pay annual interest to bank. So this is one of the problem that you have. And other than that is when you pay, this one will reduce the profit for the year. Okay. Next is, okay, we make it into in a sentence. One disadvantage, the interest on bank loan is payable annually regardless of the profitability of the business. Okay. And then, okay, done. Suggest two ways of raising long-term fund. Your long-term, short-term, okay. Short-term fund. Short-term fund, you can take the short-term loan. Okay, there is one of the loan that you can take, or sometimes we take bank overdraft. So this is the short-term fund. If talk about long-term fund, you all have learned the capital employed. Okay, capital employed component, you have capital at equity. If you talk about the company account, equity or the capital. Okay, equity plus the non-current liability. Equity or the capital, this is your internal fund. Internal fund for long term. Okay, long term, internal, long term. Whereas non-current liability, this one is your external. External means that you go outside and get it lah. It's the external fund. So here they say, suggest two other way of raising long-term fund. So this is external, you can get from the bank. If you don't want to get from the bank, you can borrow from relative. So this is also a money or from your friend. So this is the external. So if refer to back to this question, so your answer can be internal fund. You can be contribute additional capital. Okay, or else want to get, you got no money, Mustafa no money, then you can invite your friend, to join partnership to increase the fund. So this is the way that we can get. So basically, you have two ways. If you want to borrow from outside, you can borrow. Then this is one of the way. Don't borrow from the bank. Borrow from your friend or your relative. Or another way, you have money, you put in more capital, and you invite other friends. If you don't have money, get someone to become your partner. Okay, let's move on. Zikri is a retailer. His financial year ends on 31st August. Asli pays Zikri a commission on goods purchased from Asli by Zikri customer. Okay, here, Asli pays Zikri a commission. So, commission is receivable to Zikri. So this one is a other income to Zikri. Okay. The commission is payable by quarter in arrears. Okay, every quarter, that means 1 year pay 4 times. Zikri provide the following information. Commission outstanding. So when you hear this commission outstanding, in your mind, you must clear whether this is an income or expenses to Zikri. Once you define correctly, then your account should be fine. Okay, because income account, okay, just put in some revision for it. Okay, income account. Any income, so long as income account, okay? So here, debit balance, just put in all the information first. Balance brought down. This is the current liability, which is that income received in advance in last financial year. This is a liability. Okay. If you have the income in here, this one will be the current asset, income owed, okay, or outstanding in last financial year. Okay. To receive in this financial year. Make sure the position correct, then easier for you to decide. Okay, next is this income account. You will get the money. When you get the money, bank debit. So automatically here will be credit. So must be clear about the position. Bank receive money, income account giving out the money. End of the year, if you have any balance carried out, this balance carried out in the credit side is shown is a current asset, which means that income owed in this financial year. Okay, if you have the amount if you have this carried out in the debit side, this is a current liability. And this amount is the income received in advance for next financial year. Okay, so take notes about this information. Okay, in here the balance figure, which is the income statement. Normally the question asks us to find, normally, but not 100%. Sometimes they can ask you to find the bank account. So this is the amount that you need to find normally. But these two accounts, the position for income are fixed. This side always must be in the debit. Okay, bank, this one must be in the credit because bank receive money. And this one in the debit because you are going to transfer this amount into income statement in the credit side. So take notes for the income. Okay, now go back to this question. We need to prepare on it. Okay, we prepare the income account. Let me put in the full. Wow. Okay, commission owed on first. This one is an income owing. So we have the asset 2016, September 1st. Okay, balance brought down. Okay. And the amount is 495. And this amount check received for this 3 period. Okay, be careful with the financial year end. Okay, the financial year end is the September, August 2017. Here, this is a check that we received, bank. Okay, so sorry, the date, September 4th. Okay, and the bank amount, bank, and the amount is 495. On the December 3rd, here is also bank. The amount is 515. On the date of March 5th, also bank. Amount is 374. But after that, here second, June 2nd. Make sure your date is correct because IG, the date is important. So all this information settle, we credit into here, follow the date sequence. Commission outstanding. Commission outstanding means it's an asset. Commission outstanding. So this is your carry down amount. So August 31st, balance carry down. So we have the amount 392. So based on this, all the information we have, now we know that the account that we're going to put in here is August 2031st. Okay, here we got to insert the year had changed, so I had to change the year 2017. Okay, and then now we need to calculate income statement amount. Income statement. Okay, the subtotal. Okay. So take the credit minus the debit. So this is our subtotal 1685 for the commission. Okay. And then in here, carry down, brought down, settle it. And one more thing, I noticed sometimes some of you didn't underline. Please make sure your this subtotal, all these put underline of it. Okay, so this subtotal, underline on it. Okay, make sure that do this all proper. Okay, next is for the rent account on 1st Jan 2017. Zikri rent premise at an annual rent 9,600, payable 6 months in advance. So every beginning 6 months, he had to start to pay already. Rent was paid by check on first. Okay. Every 6 month pay, that means he paid divide by 2. So this one, when he paid, this is the expenses account. Expenses account. So expenses account is opposite to the income account. So this amount paid on 2017, January 1st, and paid by check, so must be bank. Okay. This amount paid on this, and how much of it? 9,006 divided by 2, because pay 2 times every 6 months. So another payment will be on July 1st. Also the bank amount, same amount. Okay, now back to this one. Look at the timeline given. Here, he paid 1st Jan 17, and the financial year end 31st August 17. When he paid on here 1st July, and then he paid on here 1st Jan. So 4,008, 4,008. Financial year and in here. How many months he actually rented for this financial year? From the 1st until August, so 8 months only. Okay. So this 8 months, when we calculating the income statement amount, 2017, August 31st, income statement. We take 9,006 divided by 12 times 8 months. So this 6,004 we got to recognize as the expenses. Another balance is our prepaid amount. Okay. So take this amount minus this amount. So this is our balance carry down. So in 2017, September 1st, balance brought down. Okay, settle for this question. So be careful when come to the topic other payable, other receivable. This information quite important. Okay, the timeline cut off date is important for you to decide. Next is the following account appear in Zikri ledger. On 31st August 2017, the inventory of stationery was valued at 76. So this is the end of the year. Starting the value, so what we got to do, okay, I'll put into here so that can see the income statement amount in stationery account. Date, detail, okay. Put in all the information first, then we will see what is the thing that we want to explain. Okay, balance brought down 54, and then September 2017, February 8, XY Limited. Okay, 212. And in here, 2017, July 31st, drawing 15. Okay, we know that this one also expenses account. Expenses account. So the nature similar to the rent. The position of the account. The position of the account for the bank must be in the debit side. Okay, for the income statement must be in the credit side for the expenses account. Opposite to the income account. Income account, debit is an income statement. Credit is a bank. Okay, so take notes for this one. Now come back to this one. They say that this 31st August 2017 inventory, this is the balance carry down for 2017 August 31st. Here we have balance carried out. Okay, I put one more down. Balance carried out because we know that expenses, income statement must be in here. So I leave a space for me because income balance carried out must put into the last row. This is always the last. So we put behind. Okay, put after the income statement. Here they have 76. After that, they say, explain each entry in the stationery account. State where the double entry of each transaction would make. This balance brought down 84. This information trying to tell us that balance brought down 1st September 2016. This is the inventory opening inventory for stationery at 1st September 2016. Okay, so this is the opening inventory for the stationery, or balance of inventory from last financial year to carry to current financial year. Okay, so this is the information. And take note that balance brought down, balance carried down always in the same account. So here is a balance brought down. So another entry, they ask for double entry. So your double entry here, debit, here must be credit. So your entry, double entry. So this double entry will be credited, okay, because here is debited. So another double entry will be credited. Credited stationery account. On what day? Here is a 1st September. Your financial year end is 31st August. So in here, credit stationery account on 31st August 2016. So this is your double entry in this same account that we put in. For the balance brought down, balance carried down. When else come to this XY Limited, 8 February 2017. So this entry is showing that we bought, okay, bought stationery on credit. from XY Limited. Be careful with the word on credit because when you see the supplier name, this is purchased on credit. Bought stationery. Okay. The double entry. Here we put XY Limited. So another double entry will be credited XY Limited account. Okay, credited XY Limited account. Always is opposite each other. Okay, next. Drawing 31st July 2017. This trying to show that the business, who is this person? Let's see, Zikli. Okay, Zikli took stationery for personal use. So the word personal use emphasize it when you have the drawing account. Okay, drawing amount. So the double entry is, since here is a credit, automatically you will put debited drawing account. Okay, next calculate the amount which will be transferred from the stationery account to the income statement on 31st August 2017. So here, because we have this account, so you take the subtotal debit more than the credit. So we take debit minus. So this is the amount that we're going to transfer. And because this is only 1 mark, so what I would suggest is you show the working, take the amount. Yeah, let me show the working here. You put 84 plus, show the working that how you get your answer for it. Don't need to open this T account. Okay, just show the working how you get it. So this is the this account done. Okay, 205. Now next is name the section of the statement of financial position which the balance of stationery account should be included. So you have 5 sections. SOFP, non-current asset, current asset, capital, non-current liability, and current liability. So we see whether the balance carried down or balance brought down. Here, balance carried out in the credit side. So means that balance brought down in here. This will be our asset. Stationery is our asset. This is the current asset. So here, they say, name the section. This is 5 sections. So you put current asset. Okay, next. After preparing the financial statement, there's some error. Complete the following table to effect of the gross profit and the profit for the year. Where the error, this is error of each effect of this error. This is the effect before adjustment. Okay. Here, okay. General expenses omitted from the income statement. General expenses is under expenses. So gross profit, no effect. Effect on the profit of this one understate, this one will be overstate. When I come to opening inventory. Okay, I explain in here, then later we put. Okay, opening inventory over value. Opening inventory over value, cost of sales over value. Okay, and then cost of sales over value, gross profit under value, because we take revenue minus cost of sales. Okay, gross profit will be under value. Gross profit under value. Profit for the year also under value. Okay, the reason is because when we do the simple income statement, okay, the simple income statement, we have revenue and then minus cost of sales. So then get the gross profit. Okay, and then after that we plus other income, and then minus expenses. So use this information, try to figure out over or under will be easier. Yes. Profit for the year. Okay, so try to use this information to figure out this one. So for this one, number one here, so in this case, our gross profit will be understate. Okay, so understated. Under value is understated, same meaning. Okay. This always together. Gross profit and the profit. Most of the time they are following each other, the direction. Okay, they are following each other. Next is that okay, wages over added. Wages over added. Expenses overstated. Expenses overstated. Profit for the year understated. So this is the impact for the wages. Never talk about the GP. So this one is no effect. And this one will be understated. Okay, the next one. Sales return omitted from the income statement. The double entry for the sales. Sales return omitted. Revenue overstated. When revenue overstated, gross profit overstated. Okay, and gross profit overstated, our profit for the year also overstated. So this one, okay, here overstate. So overstated. This one also overstated. Next is Carriage inward include in the expenses in the income statement. Carriage inward okay, is part of the cost of sales section. Part of the cost of sales section. Here we go and put into the expenses. Cost of sales will be understated. When cost of sales understated, gross profit will be overstated. But slightly different for this one is when we treated this one inward as a expenses. These expenses will be overstated. When overstated, by right, profit should be understated. But somehow, when the cost of sales, understated, no effect for profit for the year. If you want to be clear, then you put in the number. See what is the impact on your this income, on your this revenue, cost of sales. You can put in the number and play around and see what is the impact on the profit if you have this situation. So this one in here, carriage inward didn't recorded. Go to put into expenses. So gross profit overstated. So this one overstated. But in here, no effect. Okay. Okay, done. One more. Purchase return add to the purchases. Purchases return by right should be in the purchases return is credited. Okay, when this credited should how to say read should be okay, should be in credit side, and this one it will increase reduce purchases amount, and then gross profit should be higher. But we make a mistake. Mistake is treated as purchases. Okay, when we treat it as purchases, our cost of sales increase. When cost of sales increase, gross profit decrease. So which means that understated. So gross profit understated, profit for the year also understated. So for this question, the number last one will be here, cost of sales, gross profit understate. So understate. So these two will be understate. Okay, let's continue. Anything need to ask, put into the chat, okay? Okay, Rashida is a wholesale seller. Her financial year end on 30th September. She provide the following. And the question, this is all the adjustment necessary to make. And they asked to prepare the income statement. So let's put in what is necessary. Start from the revenue. And then after that, they have written by customer. So this written by customer means less sales return. Okay, we get the net sales. So the revenue is 57200. And the sales return is 1840. So take this minus this. So this is our net sales. Okay, the next one, less cost of sales. Less cost of sales. Okay, cost of sales. See what got opening. Okay, this is the opening. Okay, inventory. Inventory at 1st October 2016. So the amount is 37150. And then we have purchases, we have return to supplier, we have carriage inward. So these all are under the cost of sales. So purchases, and then we have the purchases return, which is to the supplier. And then we have the carriage inward. So take note, carriage inward is under this one. So purchases, this question, they give us the 3 column. So try to arrange accordingly. So purchases 455900. And purchases return to the supplier 2750. And carriage inward 6940. Show your net. This minus this and plus this. This is your net purchases. And next, move on is inventory. September 2017. So the amount is, okay, here. Inventory at 30th September was valued at 41,160. So take this, okay, so put into here. Take this plus this and minus this. So we get the gross profit. Okay. Another, see whether got other income or not. So check through first. Here, a loan of 20,000, interest charged at 6%. But Shida live in above 1 quarter. This is trying to tell us this is the drawing. The feature and fitting depreciate 20% using diminishing. The formula for diminishing, take cost minus the provision for depreciation. The office equipment is revalue at the, this is revaluation method. The trade receivable include 300, which should be written off. This 300, after that, doubtful debt. So in this case, don't have the other income. Okay, now we put minus expenses. Okay. Here, wages. And then general expenses. And then rate and insurance. I put in all the amount first. Later on need do adjustment. Loan interest. Office, this one is the depreciation. Depreciation of office equipment When you saw the asset, that means depreciation in your mind. Okay, now wages is 74200. Rate is, oh my God, see so wrong only 1003. Okay. Rate and insurance 2008, interest 400. This one later. Okay, here a loan of 20,000 was received on 1st April. Interest charge per annum. So if we calculate the financial year, okay, for the number one, financial year ended is 30th September 2017. Okay, loan taken is 1st April 2007. So from April 2007, 1st April until 30th September 2007. So this one total memang April, May, June, July, August, September. So 6 months. Okay, so this one is 6-month period only. So if 6-month period, when we calculate the interest on loan, so we have to take 20,000 times how many percent? 6%. And then we have to time 6/12 because this is only 6-month period. So 20,000 times, why like the colors? Give me a minute. Wait for a while. Okay. So take 20,000 times 6%. And then divide by 2. So this is a 600. So this amount, we get 600. But you notice that here we only 400. In this case, what we got to be careful is here we have to take 400. Or another way is straight away you take your this working, put into here to show how you get the 600, because you must record 600, not 400, because this is the actual pay amount. Not the actual pay amount, actual cost incurred 600. So we take this amount as an income statement amount. So another 200 is your balance carried out, which is the accrued or liability. Now next is that Rashida live in a flat above the business. 1/4 of the rent relate to the flat. So 1/4, that means our the rent rate and insurance here. 2008 is related to 3/4, related to the business. So in here, we only can take 3/4 because 1/4 quarter is related to the drawing. Okay, next is the feature and fitting are depreciate at 20% using diminishing balance method. So here, depreciation of feature and fitting. So according to the information diminishing, so we have feature and fitting. Okay, feature and fitting here, 65,000 minus provision, and then times how many percent? 20%. Okay, So this amount 6500 minus 23500 times 20%. So 8,300. Next is the office equipment is revalued at the end of each financial year. The value at the end is 20,600. So for this one, the balance brought down, office is 21,000. During the year, we have one purchase here, office equipment. So we plus 2008 and minus this one, 20,600. So we get our depreciation amount 2100 plus 2800 minus 2060. Okay, now the next one is the trade receivable include 300 which should be written off. This written off means irrecoverable debt. Remember to use a new term, irrecoverable debt, which is 300. And a provision for doubtful debt to be created. The moment created, this is the first year provision for doubtful debt. So the calculation, you have to take the trade receivable amount. Where is the trade receivable? Where is our trade receivable? This is end of the year. Okay. Then we put revenue is, then we calculate first the, okay, let me put in the simple trade receivable account. We have balance brought down, which is the amount trade receivable 34,800. Our revenue, this is your sales. Sales is 57200. And then we have the return to customer 18. So sales return which is sales return 1840. And then they didn't keep the receipt. Let me see. Return by customer, payment by check. Okay, let me see what's the information result. Where is the trade receivable? There is no trade receivable. Where is the trade receivable? Payment by check. This is all the bank. And then let's see what's one comma. Where is the miss out? Where is the trade receivable? How trade receivable end of the year? Might miss out any information. Let me check the question first. Inventory. 2% of the remaining amount should be created. We don't have the bank amount. 34,000. Let's see. Where's the missed out? Okay, revenue and the bank amount don't have. Oh yeah, here. This one bank also they didn't. Here, office trade receivable. Okay, payment by check. Loan 20,000. Okay, let me open the bank account. Bank account. So all these total add up. Let me put in the amount first. 6940 74200 and then 1300 interest 400 office equipment. Okay, a loan received on, so this one bank loan. Bank loan is 20,000. 20, how come cannot? Cannot. What happened to my 20? How come cannot? Yeah. What's wrong with my tab? Cannot key the number. Shoot. How come cannot key? Yeah, let me see what's wrong with my tab first. Oh my goodness, something wrong with my, how come cannot move on? Yeah, let me see what's wrong with it. Can you move up and down? Can you move up and down? Come on. Nice. So, okay, I think okay already. Here, the bank loan, 20,000. Okay, here the subtotal, you notice that we don't have the bank amount balance. They didn't mention at all. So what we have, the subtotal, 85. So we take this minus this. So here we get 65. What else that we have? Supplier account also. Supplier. Return to supplier. Bank. Let's go to one more item. This one, supplier. Trade payable. Okay. Trade payable is taking purchases 455,900 minus return 2750. So this is trade payable. Okay. So this one will be our trade receivable. Okay. And then subtotal. Here got irrecoverable debt. Okay. The irrecoverable debt is 300. So we take this minus and minus and minus. Okay. The answer is not correct. Where is the mistake that I made? Where's the, we don't have the question like miss out something. Where is the closing balance? In here, they didn't mention at all the closing balance. So let me check the where is the my thing go strong. 71321 603,000 to 8,300. Because the question they given is this, they got the 34500 times 3%. But where is the 34? Don't have anything about this one, 34. 2% of the remaining amount should be created. This is beginning year. Is there mistake anything? This is the balance carried out, but this is the wrong amount. Where is this question missed out? Sounds like missing out some information in here. Okay. Okay, what I can very sure this question something wrong. Because they do not have the closing. Okay. You don't have the closing balance for this one. This amount missing. And receipt. This one, trade payable. The balance will be trade receivable. But put into here, this amount is wrong. And based on what I see this question, here they take, based on the working in the answer sheet, this provision, they take 34800 minus this 300, which is something wrong on it, because this should be the beginning year. Beginning year, this is the opening. This is not the closing. But this opening, how can it become this? I think it's quite sure there's something, this one something wrong on that. Okay, so this amount, I just need to highlight. Based on marking scheme, it take it to opening balance. Okay, the opening balance is, they take opening balance 34800 and then minus irrecoverable debt 300 and then they times 2%, which is wrong, because here this is the information here basically is end of the year. We cannot take the opening. How can we know that this one is the same at the end of the year? They didn't, in the question also, they say that they didn't mention that end of the year, the trade receivable amount are the same. So basically, I believe these questions miss out some information for this sentence. For this question 6, they miss out the amount that to be given for the trade receivable amount in the question. Because most of the time, if the question related to this, irrecoverable debt and provision, they will give another sentence, the trade receivable amount is how much. But sounds like they are using this one, which is quite funny, I feel it. But anyway, this is the what they've given. Take this one, opening minus this one. But in the exam, cannot be, because unlikely to happen to this type of thing, but we don't know why it's happened. Because by right, should take balance carried out for trade receivable, not the opening. This should take the closing balance. So this one I can't explain why is this thing happen, but definitely I don't think this should be the way lah. Okay, so I just take this amount times 3% or 2% times 2%. Okay, 2%. So here times 2%. Okay, so if I follow this one, then I get the answer. If I didn't follow, then I cannot get the answer. So here, provision for doubtful debt, 2.69. Okay, so I have to take this one because I got no way to find I try to use the bank, I cannot get the answer also. Okay, because this amount not gel to this one. So something wrong. I believe miss out one sentence in this number 6 information. Okay, now you still have to proceed for it. Okay, so we take this all amount. So let's finish this set so that at least I can share with other group. So here we take this minus this. So here the amount is profit for the year. So take notes for this question. This information something wrong. Okay, now next is explain how the accrual or matching principle has been applied in the preparation of the income statement. Support your answer by reference to one of the item. So matching concept, accrual concept. Matching concept talking about cost incurred matched to the revenue earned to ensure the profit and assets should not be overstated. So in here, first, because it's 2 mark, give the first general definition. Accrual or matching principle is to ensure costs or expenses incurred match against the revenue earned for the same period. Okay. This is the first sentence, general item, and then come back to this one. By adjusting the prepaid, let's see what the example can be used. Here is we can take the accrual by adjusting the accrued of loan interest charge added into loan interest paid, the actual interest on loan incurred will recognize as expense in income statement. Profit will not be overstated. Okay, so done for this one. Number C, explain how the business entity principle has been applied in the preparation of business entity is referred to the number 3, this one, which is that 1/4 of the rate and insurance transfer to the drawing. So here, my God, yeah, give me a minute. Make mistake already. My goodness. Okay. Okay, this one. The business entity principle is the business and the owner is the financial transaction for the business and owner should be separated. Okay. The rate and insurance for the flat stay by Rashida excluded from income statement and charged to drawing account to reduce capital, Rashida capital. Okay, so this one, 2 marks enough to cover. Rashida was disappointed with the performance of her business in the year end 30th September 2017 and decided to compare her financial statement with those of another business. Explain 2 factors Rashida should consider when comparing her. Okay, here, when we want to compare, they want to compare with another business. And Rashida, how long Rashida started the business? Rashida was wholesales, but didn't say when. So we don't know when, whether it's the same time or not same time, we're not sure. But many other things that we can ask her to take notes. First is the size The size of the business Rashida should compare is similar to her business. Then only we can, so that she can check her business performance. Other than that, what else that we can think about? Two factor which is compare financial. The accounting treatment used by another business may not same with Rashida. So therefore, it gives different impact on the financial performance. For example, the depreciation method used. So this is just example on it. Other than that, if you want to talk, you can talk about that the location. Talk about the location, okay? And then you want to talk about the what else that we can talk about? Size, location. What else? Then we have non-financial factor such as the skill of the employee. So this all can be compared. Okay, now last question. Finish up first. If you all want to leave also can, no problem, because after that I will send out the recording after that. Because so far none of you give ask the question. I'm not sure you all have any question. If any question, just stop me and ask. Ben opened a retail store on 1st April 2017. He introduced the following into the business. So this is open, that means first year. Inventory, shop fitting, and this journal entry is to open the journal entry. Narrative is not required. On the same day, Ben received a business startup loan, 15,000, which was paid into the business bank account, interest at 5% per annum. So this information when we prepare the journal for the opening. Okay, go ahead. Okay, no problem. Who want to go? Okay, here the debit and the credit. When we prepare the when the question is asking to prepare opening journal entry, put in using the asset, debit, and then capital and liability, credit, accounting equation concept, okay, or trial balance concept. So take note for this one. So here we have inventory, shop fitting, cash, and here the amount 15200, shop fitting 14300, and then cash they say that 17900, of which 1700 pay into. So the balance here is the bank. The bank pay 17400. That means here is only 500. Okay, so cash is only 500. Now at the same day, he received the business startup loan. So another 15,000 he received from the bank loan. So this bank loan is a liability. So liability is in the credit side. Okay. And that's all, no more information. This bank, don't forget, okay, plus 15,000. Okay. And then the balance that you have is your capital. And because this is the opening, put in the subtotal, debit and credit subtotal. So the amount okay. So take this minus this. So basically it's your this total amount that you are putting in. Okay. Now next is the following transaction took place in 1st September. September 3rd, invoice received from EF Limited for the office equipment. So this is the purchase of non-current asset on credit. When it's on credit, using the general journal. So debit the office equipment account and credit EF Limited. And they say that narrative are required. So put in the reason. So purchase of office equipment on credit. The important thing, emphasize this purchase of the non-current asset is on credit. So 1,009. Okay. Goods taken by bank for person. The moment personal use, drawing account. Goods is the purchases. When they say goods, this is for goods taken. Okay, credit purchases. 430. 430. And here we put goods taken for personal use. Okay, done for this one. Next is here. They say that what is a capital expenditure? And then the example, same thing for this all, the four item, 1, 2, 3, 4. Okay, so 6 items they ask for, all in here. Okay, so the example also inside in here. So only that here, revenue expenditure. Revenue expenditure is a money spent on running a business on day-to-day basis. Okay, example in here, what we can put is, I insert into here first, because they put in. Payment for shop rent. Okay, electricity. All kind of things can be, okay, can make a lot of things that you can put revenue expenditure. Okay, revenue receipt, this is the item. Okay. Now next is on 30th September 2017. Ben calculate his profit for his first 6 months of trading. The following error were discovered. 500 received from the sales of the old shop fitting. Book value 550 was debited to the cash account and credited to the sales account. No other entry were made to the disposal. So this disposal by right, we should receive debit. We should debit this 500 money received from the sales. We should debit bank and then credit disposal account, which is 500. Okay, but we missed out. We didn't do this one. And then the book value of this is actually 550. So if we transfer out this one, transfer this 550, we will debit disposal 550. So the differences for this one, okay, here and this, we will have to credit non-current asset, credit shop fitting. So by right should be happen this one, but because we omit to this one, our profit also, our losses, okay, because this one is we get the loss, debit income statement and credit disposal. So 50 is the expenses. This is the 50 expenses, the first time error. Okay, error 1. For number 2 error, 6-month loan interest was treated as part repayment of the loan. So here, by right, we should debit. When we 6-month interest should be debit loan interest and credit bank. But we go and put debit loan and we credit bank. So this is the omission. So this one is the wrong entry. So 6 months, how much of it the loan? Let's see. So the loan amount is here 15,000. So 15,000. Okay, 15,000 times the loan interest. Loan interest is how much? 5%. Okay, 5% times 5% times 6/12. So 375. We go and debited to the loan, but this one omitted. This one omitted. This one is a wrong account. Okay, now next is errors 3. The shop fitting account was debited 1/4. Of this 1,003 was for the new shop fitting and the balance was for the repair. So this one, error number 3 is by right we should debit shop fitting and then we should debit repair and then we should credit bank. Okay, but here we've all put into here. We put 1450. Okay, this one by right should be, okay, by right should be, here is 1,003. Okay, here is 150. So here non-current asset overstated, expenses understated. Okay, now look into the effect. The effect on the asset, the number 1 they already given us. Okay, so this one we don't need to talk about it already. Okay, why they put in? Okay, the error number 2. Here, error number 2, the effect of each error. So here, error number 2, this one is a non-current. This one is non-current liability. So asset, no effect. So this one, will be no effect. Okay, no effect on the asset. But for the liability, this one is reduced. So this one, it will be understate. Understate by how much? Understate by 375. And then because of the interest is understate, interest understate, expenses understate. When expenses understate, profit will be overstate with the same amount. Now let's last. Here, shop fitting is an asset. Shop fitting overstate. Overstate by how much? 150. 150. And this one, no liability in here. So this one, no liability. That means here will be both also dash dash. And here, this one repair expenses understate, profit will be overstate. Overstate by 150. So far, okay? So this is what we need to cover for today. So later on, I will send the recording. So we can end now. You can come out if you want. Okay? You can exit now. Okay, thanks for it. Okay, can come out.